So when we talk about how this is unfolding and why these countries are choosing gold instead of dollars, not only has it outperformed the 10-year Treasury 2-to-1, as we've talked about, not only is it an asset that has no counterparty liability with it if it's in your own possession, as these governments are quickly realizing, of course, but at the same time, it's outperforming. And
you're watching Silver News Daily. Subscribe for more.
Did you know that silver could be on the brink of a historic rally that may shatter all previous records? This isn't just speculation. Key factors are aligning that could drive prices to heights we've never seen before. And today, we have none other than Andy Schectmen to break down exactly why this is happening and how you could benefit from this unprecedented opportunity. Imagine a world where silver skyrockets past its all-time highs, and you were one of the few who saw it coming. Stay tuned, because this could be the most important investment decision you make this year.
No, I just think it's absurd that the way that the Federal Reserve and their open market committee applies what they believe is the preferred rate for millions of savers and borrowers and spenders and manufacturers and on and on and on. And I guess to me, what I find most humorous is how they are trying to gaslight us into believing inflation has been defeated. And it's important to understand that the CPI is a worthless statistic. And it's intended to conceal the debasement of the currency, and it's happening at a rapid pace. One of the things I found very interesting about the 50 basis point cut, you had everyone saying 25 basis points, maybe 50. We go all the way back to the beginning of the year and see how many times they've changed their strategy. There wasn't going to be any rate cuts. There was going to be 4 rate cuts. And here we are. We finally got this rate cut, a 50 basis point. And here we are. We look at gold. It's up to basically its all-time high today. Silver's up back again above 31. But one of the things that I found interesting is that actually Treasury yields went higher on the back end of the curve, and that to me signals big trouble ahead for the Federal Reserve if they're lowering rates and the back end goes higher. But that's the way it should be if you're thinking logically that a government has given in to inflation, raised the white flag and said, we're going to focus on our dual mandate of full employment, which is a bunch of nonsense. And in essence, they're doing what all governments have done. They're giving in to inflation and taking the easier path rather than tightening their belt and choosing austerity. They have done what all governments have done, and they have pivoted. And it's I don't know. I think ultimately this leads to some real problems as we continue down the road.
Increasing global demand is setting the stage for a new era in the silver market. Analysts are forecasting silver demand to reach an astounding 1.2 billion ounces in 2024. That's the second highest level ever recorded. What's driving this surge? It's the industrial sector, where silver is a key component in everything from solar panels to electric vehicles. The demand for high-efficiency N-type solar cells and advancements in automotive technology are pushing industrial silver usage to new highs. And it doesn't stop there. Jewelry and silverware demand are rebounding, with India leading the charge as consumer confidence returns. But here's the kicker. While demand is climbing, supply is struggling to keep up. This mismatch could be the spark that ignites the next big rally. But what does this mean for investors like you? Is this the beginning of a historic opportunity, or are we just getting started? Let's dive deeper into what's fueling this unprecedented demand for silver.
I found it also interesting, too, just in reading some articles last night about John Paulson, the billionaire hedge fund manager, who has finally said what others have figured someone like him would say, and that is that if Kamala wins the presidency, he will pull $9 billion in assets from various sectors because of what she is proposing, in particular, raising the capital gains tax, raising the corporate tax, and introducing a 25% unrealized gain on people just like Mr. Paulson, and he warned that if she were elected, that this would lead to mass selling and market crashes. And we've been talking about that. There's no question. But the bottom line is that when I look around, I see that we're at a point right now, Dunnigan, where there is no escape from not only the constantly depreciating currency, but also from this massive debt, that burden that we have that continues to grow. And I think they figured that, well, this inflation, which is a hidden tax, is a lot easier than continuing to raise taxes. And this is done at a time when, our stocks are up around all-time highs. Our deficit is at all-time highs. We've redlined the national debt. And then you get these fake numbers like the CPI and the jobs numbers. And it's very difficult for the average person to understand exactly what is happening. But when you talk about these fake numbers, like the job numbers we talked about last week, 1.3 million Americans lost their jobs, replaced by 635,000 people, most of which were in this country illegally, and part-time jobs at that. Switching gears just a little bit to gold and silver, just a couple things I want to talk about, and we can move on. We've talked a lot about over the last few years of India importing copious amounts of silver. And, their gold numbers are up very high also, but India looks at silver in a very strategic manner. They imported almost 46 million ounces of silver just in August. That's around today's numbers. That's worth about $1.3+ billion, over 45 million ounces of silver in the month of August.
Let's talk about the real game changer here, the booming industrial demand for silver. We're seeing a record-breaking 690 million ounces projected for industrial fabrication in 2024. That's right, a new all-time high. This demand is being fueled by two major sectors, solar energy and automotive. Silver is an irreplaceable component in photovoltaic cells, and with the rise of high-efficiency N-type solar cells, which use even more silver, the need for this metal is skyrocketing. And it's not just solar. The automotive industry is accelerating its use of silver too. Think about the shift to electric vehicles and a massive investment in battery charging infrastructure. Every new electronic component in these cars needs more silver. Even consumer electronics are bouncing back, with AI-related applications leading to new product launches that all rely on silver's unique properties. But here's the big question. Can the supply keep up with this exploding demand? If not, we could be looking at a massive price surge. And the best part, this industrial boom is only one piece of the puzzle. There's so much more driving this rally that we'll uncover. But first, how do you think this unprecedented demand will impact the silver market in the coming months? Let's dig deeper into the economic factors that are set to make 2024 a historic year for silver.
And you annualize that out, they are continuing on a pace that is literally draining all of the exchanges. And you wonder how long the 6 or 7 or 8 commercial banks who have been short are able to continue to play this game. It's interesting, and also looking at the commitment of traders numbers that just came out, it's as if the commercial banks are pivoting and changing the way that they are doing things. They are covering their positions, and they covered quite a bit recently, just the other day. And I noticed in looking at where the silver came from, it didn't come from the managed money. In other words, the managed money are usually the ones that sell the silver to the commercial banks. In essence, it came from the producers this time, meaning the managed money wasn't selling, and the commercial banks pickpocketing them the way that they've been doing for a very, very long time. In this case, managed money said, no, we're not going to sell that silver to you, and it was purchased by the producers. This is telling me that we are getting very close to that moment where the commercial banks realize that being short, naked short, in a market where a country like India can import 45 million ounces of silver in a month is as stupid as a mud wall, and they're going to bail. And we can see, it seems as though, almost as though that's indeed what they are doing. Now, I don't want to get ahead of myself, but when I look at silver today, up over $1 to 31 and change, 31.20, I think it is one of these days that is exactly what is going to happen, is that they will let it run to the upside realizing that the only way to manipulate a market down again over an extended period of time is to push it in the direction that it is going. And I think they are realizing this is a game that is crossed the line of being foolish and is now into, sink or swim. And I also think we will witness a period of time where all of these commercial banks start to eat their own. It will not be about a coordinated, collusive agreement the way we've seen these 8 banks short on your interview with Ed Steer and the chart that we talked about a few times now. It appears as though they've been doing this in a coordinated, corroborated fashion, and I think that will change. They will start to realize it's every man for himself.
Now, let's zoom out and look at the bigger picture, the economic backdrop that's setting the perfect stage for silver to shine. We're entering a period where the U.S. Federal Reserve is expected to start cutting interest rates in the second half of 2024. What does that mean for silver? Lower interest rates typically weaken the dollar and make precious metals more attractive as safe haven assets. With inflation concerns still lingering, investors are seeking protection, and silver is standing out as a prime candidate. But it's not just the U.S. economy at play here. Global uncertainties, from a slowing Chinese economy to geopolitical tensions, are pushing more and more investors towards silver as a hedge. And let's not forget the institutional players. While they've been cautious due to interest rate speculations, a shift in the economic outlook could see them pouring back into the silver market. So we have a potential perfect storm brewing: rising industrial demand, tightening supply, and a favorable economic climate for precious metals. The real question is, are you prepared to take advantage of this opportunity before the rest of the market catches on? Because once the Fed starts cutting rates, it might be too late to jump in. But there's more to this story. What happens when demand outpaces supply? And just how big could this rally get? Let's find out as we explore the supply side of the silver equation.
One last thing I want to talk about is gold. And, we talk a lot about Saudi Arabia. We talk a lot about gold importation by these countries, a lot of de-dollarization. And it just came out that the Saudi Arabian Monetary Authority secretly, and that's the key here, secretly purchased 160 tons of gold from Switzerland. And that was discovered because of the import data that goes through Swiss customs data. Now, most of these governments, I would argue, have been secretly purchasing gold and silver and all sorts of other de-dollarization techniques for the better part of the last 3-4 years. It's just this time the Saudis got caught with their hand in the cookie jar. And, again, in the month of August, massive imports, 160 tons of gold in the month of August. Well, how much more did they get away with that people didn't catch, or that the customs data didn't report, or that was purchased through sovereign wealth funds, through different channels that are not reported to the IMF or through customs data? I would argue quite a bit. But I read an article. There's a man named John Little, and he's a hell of a researcher, and I quote his statistics quite a bit. And he wrote something down that I just wanted to kind of regurgitate here, because when you think about it, it becomes really interesting. We talk about how gold, in many cases, at least I think it is replacing the dollar, at least on a geopolitical macro scale. You see these countries that are de-dollarizing, and in many cases, it appears as though oil has been remonetized, so has gold. These two assets are worth more than the dollars that purchased them. And he wrote something that I kind of updated it here today. It's a little different than what he wrote, but I want people to think about things this way and why these countries are so keen on purchasing gold. With gold right now today at $25.90 and oil today at $70 a barrel, 1 ounce of gold can purchase 37 barrels of oil. And so the analogy he made was a woman's purse that could hold, he called it a 20-pound capacity purse that could hold 290 ounces of gold. And that's not too, we always talk about you could take a backpack full of gold and run to the car. So 290 ounces of gold right now is worth at $25.90, we'll call it, 290 times $25.90, that's worth $751,000 that you could put in a purse and run to the car. Well, that is worth today 10,730 barrels of oil. So when we talk about how this is unfolding and why these countries are choosing oil or gold instead of dollars, not only has it outperformed the 10-year Treasury 2-to-1, as we've talked about, not only is it an asset that has no counterparty liability with it if it's in your own possession, as these governments are quickly realizing, of course, but at the same time, it's outperforming, and gold continues to march higher at nearly a 10% compounding year-over-year return. So these are things that are happening under the seams, but when you look at a country like India, when you look at a country like Saudi Arabia, they're showing it to you, and either you get past the recency bias and the normalcy bias, or you don't. But we are at a very interesting point in time, politically, geopolitically, and these are the things that are beginning to unfold that I think you don't have to be a rocket scientist to see these ramifications. So those are the important things that I wanted to at least bring to your attention, and happy to chat about them or anything else that you have on your mind.
Now, let's shift our focus to the supply side of the equation, where things are looking a bit shaky. While global silver supply is forecasted to grow by 3% in 2024, reaching an 8-year high of 1.02 billion ounces, this increase might not be enough to satisfy the surging demand. Why? Because much of this growth relies on a few key mining projects that, if disrupted, could cause a serious supply crunch. Take, for example, Newmont's Penasquito mine in Mexico or Polymetal's Prodnos mine in Russia. Any issues at these sites could dramatically reduce global output. And let's not forget the looming threat of mine closures due to community disputes and weak base metal prices, especially in South America. Even more concerning is the drop in byproduct silver output from zinc mines, which has been a significant source of silver in recent years. And here's a critical point. The silver recycling industry is also expected to shrink by 3%, hitting a 3-year low. That means less recycled silver entering the market to make up for potential shortfalls in mining production. All these factors combined suggest that we're on the brink of a serious supply squeeze, which could send prices soaring. But wait, there's another twist to this story. If demand continues to outstrip supply, we could see a silver deficit for the 4th consecutive year. How will the market balance this growing gap? And could this be the catalyst that pushes silver to new all-time highs? Let's dive into the dynamics of the London silver market and see why the stakes are even higher than they seem.
If I had to guess, Don, again, I think they sacrificed one of their own at the altar. And if I had to guess, it's Bank of America. And maybe that's why you see Warren Buffett pulling up tent as much as he has with Bank of America. And God bless a guy like Ted Butler. I miss him already. You never know how much you miss someone till they're gone. I would have said the exact same thing about Richard Russell. And I wondered how I could ever continue to look at what at my career, at my path that Richard helped pave for me every day by reading his newsletter. I wondered how I would carry on. And I felt the same way, if I were being honest about Butler. I learned so much from him, and I wondered how would we ever continue to get this information. And thank God we got as much as we did. And he's the one who alerted us originally, and Bix Weir also, to the fact that Bank of America had a 1 billion ounce silver shortfall, naked short position. And the same thing is true about their gold, 35 million ounces, 40 million ounces short, all of it on the OTC market. Maybe that's why he's pulling ranks. Are they going to sacrifice a bank like Bank of America? Certainly think it's possible. It would be very easy for them to do that. And much to the motto these days, find a scapegoat, it wouldn't surprise me one bit at all. And, I don't know what the trigger point will be for every man for himself. But if I had to guess, that's where it is. They will blame a bank like Bank of America, who is so egregiously short, and they'll let them take the fall. To me, it seems relatively logical if you look at the way that these actors are doing things. But yeah, like I said, it's easy to manipulate a market when everyone is pushing in that direction. It's another thing when you have countries that are going out of their way to accumulate gold and silver, and even using clandestine approaches where they're trying to hide it. but ultimately the market wins, and the market is bigger than all the manipulations, and all manipulations end badly. So yes, one way or the other, it gets to that point where they all start, swimming for themselves. But if I had to guess, someone's going to pull Bank of America down underneath with them. That would be my guess if I were going to make one guess into the coming months.
Let's take a closer look at the London silver market, where a potential crisis is brewing beneath the surface. You see, the bullion banks in London are holding massive short positions in the silver market. Some estimates suggest they're on the hook for anywhere between 5 to 8 billion ounces. But here's the kicker. Most of these positions are unbacked promissory notes, meaning they don't have the physical silver to cover these contracts if demand for delivery surges. This is where things get really interesting. If investors start demanding physical delivery instead of settling in cash, these banks could be in serious trouble. The market could experience a cascade of defaults if these short positions unravel, triggering a spike in prices that would be catastrophic for these institutions. And it's not just speculation. We've already seen some signals in the smaller COMEX silver futures market, where bullion banks have ramped up their short positions as silver prices climbed from $22 to $31 per ounce. Why would they increase their exposure to potential losses? It seems they're trying to mitigate the price rise, but this could backfire spectacularly. Imagine what happens if this strategy fails, that they're forced to cover their shorts in a market already struggling with a supply deficit. Prices could skyrocket in a matter of days. Could this be the tipping point that disrupts the entire silver pricing system in London? And what does it mean for individual investors like you and me? It's a high-stakes game, and we're just getting started. Next, we'll explore why these bullion banks might be running out of options, and how it could spell a dramatic shift in the silver market.
I mean, yeah, if you look at the CPI, it's a rigged metric. It's a rigged metric where the government gets to cherry pick what items go into this basket that they're weighing, and it's completely and totally nonsensical. And all along they're talking about reaching this arbitrary 2% inflation rate, which again I've never quite understood, because why not have it negative 2%, which lower the rate, the higher the standard of living. But they're 60% away from reaching their rate of 2%, and they're pivoting and moving the other direction and reigniting the inflation engine. And if you save in dollars, as Rick Rule says, you're gonna be a victim, period. And so that what these countries have chosen to do is to accumulate assets. It goes back to what Zoltan Pozar was saying, and he's right. This is a system of who has the commodities will make the rules ultimately. So that is what we're seeing. And you look at a country like Saudi Arabia, who's trying to play both sides of the aisle, at least for now, and not upset the West to the degree that we really probably should be if we knew what their ultimate motivations were. You can see it if you're paying attention. But look, the fact that they got caught importing massive amounts of gold isn't the issue. The bigger issue to me is that there's a lot that they're not getting caught on. And these countries are realizing that holding money in dollars or wealth in dollars is a game that is coming to an end. And you can see that by them lowering the front end of the curve, and the back end, the rates go higher just by a little bit. But that's the rest of the world saying, nah, we choose to hold assets differently than any duration debt instrument by a broken and insolvent country. So I think the same thing should be true for everyone, that it's, you look at the wealthy people and they're not holding dollars, they're holding assets. And that's what we're seeing on a much larger scale here. Look at all the countries that are intending to join. Look at Turkey, look at Poland. These are countries that are massively accumulating assets, and yet they're Western-friendly countries. Look at a country like Turkey, who has applied to BRICS, the first NATO country to do so. They've been the largest buyer of gold for the last year, or right up there. So these countries understand the place that we are at. The problem here is that most people in this country don't, and they're going to get run over by this.
Now let's dive deeper into the dilemma faced by the bullion banks. They've doubled down on their short positions on the COMEX, even as silver prices climb. It seems counterintuitive, right? But here's the thing. They're trapped in a no-win situation. If they don't short the market, they risk losing control over the price, which could trigger an even larger crisis in the London silver market. It's like they're playing a dangerous game of chicken with billions of dollars on the line. But why would they take on more risk, potentially accelerating their own downfall? It's because the scale of their exposure in London is massive, much larger than what's visible on the COMEX. If they let prices rise unchecked, it could lead to a surge in physical demand from investors looking to take delivery, and that's something they simply can't afford. We're talking about a potential breakdown of the paper price-setting system that's been in place since 1987. What does this mean for the average investor? It means we're witnessing a historic battle between the physical and paper silver markets. And if the bullion banks lose control, the price of silver could explode as the true supply and demand dynamics take hold. This isn't just about investment returns. It's about the very foundation of the global silver market. But the big question remains, how long can they keep this up? And what happens if they finally decide to pull the plug on their shorts and let silver prices run? Could we be on the brink of a new era for silver, where physical supply dictates price for the first time in decades? Let's explore how global geopolitical trends are adding even more fuel to this already volatile situation.
And I don't know what you and I can do. We've tried our best to sound the alarm. Either you see this for what it is or you don't. And the crazy thing is that I truly believe that the history that will be written about or the story that will be written about in textbooks and history books, we're right there right now. Over the next 2 months, it will determine which path we go down. And I don't think either administration is going to be able to right the ship economically, but can at least mitigate the path that we are heading down with this current administration. And you can see by the maneuvering of all of these countries and how they're trying to get rid of dollars quickly and accumulate assets and even do so very privately, just how relevant this really is. And the scariest part about it all, on top of everything, including the erosion in our First Amendment rights across the Western world, where you have to think twice about the things you say and how you say it and the way you say it, is that most people just don't have a clue what is coming down the pike at us. And I don't think it's ever been more concerning. And when you see a country like India and a country like Saudi Arabia, Western allies that are doing all they can to distance themselves politely and quietly and privately from the West, it should be a big eye-opening admission. And yet our media will not tell anyone what is happening. They're more concerned about fomenting this nonsense between the two candidates and this divisiveness that we're seeing, instead of uniting us into a common a common strategy. And that's why I do what I do. And I know that's why you do what you do. But I think we are going to get into a period of time here in the next few weeks where it becomes abundantly clear just how important this really is. It goes from hiding what you're doing to outright in your face and doing it. And if the current administration retains office and you see Kamala win and you get guys like John Paulson, massive, huge hedge fund guys say, I'm done, I'm pulling up, I'm selling 2.9 billion worth of assets. How fast does that change the narrative, and what does that look like? So these are important times, and I think if, as Rick says, you're not a contrarian, you're damn well bound to be a victim, and it's becoming obvious that that is the path we're on.
Let's now turn our attention to the global geopolitical landscape, which is adding even more complexity to the silver market. With China's massive stimulus measures injecting over CNY 1 trillion into its economy, the world's largest metals market is set to boost demand for silver even further. This comes on the heels of rising tensions in the Middle East and an increasingly uncertain economic outlook globally. But it's not just China. Countries like India are also stepping up their silver imports, snapping up nearly 4 to 6 million ounces in just 1 month. This rapid accumulation is a clear signal that these nations are hedging against a volatile global economy and potential currency devaluations. And let's not forget, central banks around the world have been adding to their gold reserves at a record pace. The trend is clear: a shift away from traditional fiat currencies toward hard assets like gold and silver. So what does this mean for silver prices? Simply put, it could drive them even higher. As more countries and investors seek refuge in precious metals, the demand for silver could outstrip supply faster than expected. This surge in demand isn't just about hedging against inflation. It's a strategic move by these nations to safeguard their economies in a world that's becoming increasingly unstable. And here's the kicker. As geopolitical tensions rise, we're seeing more and more countries move away from the US dollar. This de-dollarization trend means even more money could flow into silver as a safe haven asset. Are we witnessing the start of a global scramble for silver that could push prices to unprecedented levels? The signs are all around us. But the story doesn't end here. Next, we'll explore the growing trend of de-dollarization and why countries are choosing to stockpile silver and gold over holding US dollars. Could this be the tipping point that sends silver prices soaring? Let's break it down.
It goes against the American ethics. It can't happen here. There's no way it could. And what Jim Rawls says is very true. This is the era of betrayal and deception. And if you don't see that by now, then you're gaslit, and you probably won't. I mean, I don't know how people don't see it by now, but it's look. I've played golf at that course where Trump was shot at again, or attempted to be shot at, several times. Every time I've been there, I've seen him, and he's always come up and said hello to us, as a side note. But, it's just very surreal to me that we've had two attempts on a former president's life, and it probably won't be the last.
Let's dive into the growing trend of de-dollarization and what it means for the future of silver. Across the globe, we're seeing a significant shift away from the US dollar as countries seek to diversify their reserves. Nations like China, Russia, and even India are accumulating gold and silver instead of holding onto US treasuries. This isn't just a response to geopolitical tensions. It's a strategic move to reduce reliance on the dollar and protect against potential economic instability. But why silver? It's because, unlike gold, silver is both a monetary and an industrial metal. Its dual role makes it incredibly valuable in times of economic uncertainty. As countries move away from the dollar, they need assets that can store value and have practical uses. Silver fits the bill perfectly, and with the global push towards green energy and technology, its industrial demand is only set to rise. This de-dollarization trend is more than just a headline. It's a seismic shift in the global financial system. As more nations follow suit, the demand for silver could skyrocket, putting further pressure on an already tight supply. The result? We could see a dramatic revaluation of silver as the world turns to this precious metal as a safe haven and a hedge against the declining value of fiat currencies. But here's the critical point. This shift is happening quietly, under the radar. Many investors are still focused on traditional assets, unaware that the ground is shifting beneath their feet. The question is, will you be prepared when the rest of the world catches on? Next, we'll delve into the concept of silver as a Giffen good, a commodity where rising prices could actually increase demand. Could this unique economic phenomenon lead to an unstoppable silver rally? Let's find out.
Because for 34 years that I've been doing this, Dunnigan, it's been nothing but a head fake. It's the little boy who cries wolf. And one of these days, the wolf cometh. And that's the point. And it just appears as though, in many respects, the wolf is already here. Now, is this the one where it just keeps on running? Is it possible that we see 2,600, 2,700, 2,800, how about 3,000? You take the commercial bank suppression out of the markets and the price of gold and silver will be massively higher. And the worst part about a long-term macro cycle, which we have been in, is that most people aren't capable of processing the fact that this could actually happen here. That recency bias, that normalcy bias will be the worst thing for people to hang on to. And you have to take a step back and look at what the most well-informed traders in the world are doing. And that is the fact that they are selling treasuries, pushing up the yield on the back end of the curve. They are accumulating commodities. They are distancing themselves from the West. They are formulating alliances and bonds and and either you believe it for what it is or you don't. And you talk about the BRICS. Yes, it's a slow moving process. But I've read just recently that now they're talking about bringing in all of these other groups from Asia, bringing in the Eurasian Economic Union, bringing in the Shanghai Cooperation Organization, bringing all these groups into the fold slowly and methodically. But you're beginning to hear more and more and more about bringing all these countries into the fold, which are representing the majority of human population. And this is something that isn't going away, yet you don't hear word one about it in here in the West. And so all of these things that you're saying make so much sense to me. Everything that you've just said makes so much sense to me and to the people listening. And it makes it that much harder for us to want to help our families and to see their reaction. We've got to the point now where I think it's you can only save the world, starting with one person, starting at a time, with yourself, your immediate family. The noble endeavor of trying to help everyone. I think at this point, if you don't see it, you probably won't until it's already here upon you. But yeah, I think this is right now, right here where we are, almost to the month of October. Look, in the month of October, you have this massive meeting in with the BRICS, only then followed by the election. And things are going to start to get very interesting and be very difficult for people to ignore. And I guess people are just...
Let's explore a fascinating and rare economic phenomenon that could supercharge silver's rise: the Giffen good effect. Now, most commodities follow a simple rule. When prices go up, demand tends to fall as people look for cheaper alternatives. But silver is different. It has the potential to behave as a Giffen good, where higher prices could actually lead to increased demand. How is this possible? It comes down to psychology and scarcity. As the price of silver rises, investors and institutions begin to see it as a more valuable asset, prompting them to buy even more. This creates a feedback loop where the higher the price, the greater the demand, and the greater the demand, the higher the price goes. It's a cycle that could lead to an unprecedented surge in silver prices, especially in a market already facing supply constraints. We've seen hints of this effect before, most notably during past precious metal bull runs. As prices climbed, more and more people piled into the market, fearing they would miss out on the gains. This FOMO, fear of missing out, drives demand even higher, pushing prices to levels that seem unimaginable. But why does this matter right now? Because we're seeing all the signs of this phenomenon taking shape. With global demand for silver soaring and supply struggling to keep up, any significant price increase could trigger a buying frenzy. Investors might rush to secure their share of silver before it becomes even more expensive or scarce. This could be the catalyst that propels silver to new record highs, leaving those who hesitated wishing they had acted sooner. So, are we on the brink of a Giffen good effect for silver? And if so, what would that mean for investors like you? Get ready, because in our final segment, we'll bring it all together and reveal just how high silver prices could go in this new era of demand and scarcity. Let's break it down.
They don't believe that gold and silver can continue to go higher. My belief is that gold and silver should be massively higher already, but for the actions of the 6, 7, 8 commercial banks that have done their best to maintain a Western illusion that is breaking. And it's breaking because our allies that have helped us support that illusion are breaking ranks and moving in a different direction. And India is a prime example, as is Saudi Arabia. And they're so concerned about the way that we look at this, the way that the West looks at it, that they're trying to do it in a private manner. The same thing is true about China when they told us that they weren't buying any more gold. Baloney, the import-export numbers show that they've been buying gold. And as we talked about, through their proxy banks, through the commercial banks that are able to buy from the refineries in South Africa and in Switzerland that aren't reporting it to the IMF because it's not coming from the central bank, and all sorts of other avenues, on top of being the largest producer of gold in the world and the second largest producer of silver, and then flying all around the world buying up doré bar and concentrate so that it doesn't come off of an exchange. All of these things put together shows you the tremendous effort that these countries are putting into de-dollarizing without stepping on the foot of the king, until they have enough of a mass behind them where the king isn't as relevant as he once was. So yeah, I think we're getting there. And I keep saying this, that it's going to be crazy the few weeks leading up to the election. It just seems that we're already there. And I guess we'll be able to watch it shotgun here real time over the next 8 weeks to see how it unfolds. But I think $2,600 gold is cheap. I think we'll be north of 27 or 2,800 by the end of the year, maybe 3,000. Who knows? But silver at 31 bucks an ounce is still the bargain of a lifetime. And, when you see a country like India doing what they're continually importing huge amounts of it, it ought to tell you just how important it is. And everything we've talked about with China going around the world buying unrefined silver so that it isn't noticed should tell you where it ultimately will be. You don't need to see it in front of your face at 50 bucks an ounce to wake up. You should just see not only is it continuing to move higher, it's doing so with its arms tied behind its back. One of these days, it's going to be set free. If these commercial banks are indeed covering the way that it appears in the last Commitment of Traders report without enticing the managed money to sell, then it's a whole new game. And you will see silver go bang, just like that. And it seems like we're almost there. So you pull those commercial banks out, realizing that this is a game they can't keep fighting. Yeah, it's going to be a market that I think will be unlike any other that I've ever been part of in almost 40 years of being in finance.
Now, let's bring it all together and take a look at what this historic rally in silver could mean for the future. We've explored the surging global demand, the shaky supply, the precarious position of the bullion banks, and the global shift away from the U.S. dollar. Each of these factors alone could drive silver prices higher, but together they create the perfect storm for a monumental rise. With industrial demand hitting record highs, supply struggling to keep pace, and geopolitical tensions pushing more investors towards safe haven assets, we're entering uncharted territory. The potential for a massive short squeeze in the London market, combined with the Giffen good effect, could send silver prices skyrocketing beyond what anyone expects. But how high could it go? Some experts suggest we could see silver reaching $50, $100, or even higher in the next few years. This isn't just speculation. It's based on the fundamentals we've discussed. If the bullion banks are forced to cover their massive short positions, and if demand continues to outstrip supply, we could be looking at a historic revaluation of silver. For investors, this represents a unique opportunity. But time is of the essence. As the market catches on, prices could move very quickly. If you've been on the fence, now might be the time to seriously consider adding silver to your portfolio before this rally truly takes off. Remember, though this is not financial advice, always do your own research and consult with a financial advisor before making any investment decisions. And if you found this analysis valuable, make sure to subscribe to our channel for more insights into the world of silver and precious metals. This could be the start of a once-in-a-lifetime opportunity, and you don't want to miss out.
You're right, and that's a point I'm so glad you brought up. The U.S. Mint has already told us they're out of 10th-ounce eagles. My guess is we won't see any new ones until 2025. We've been doing some really big orders lately, seriously, some very big orders, and people have an affinity for silver eagles. We're already buying, allocations into October. At what point does the U.S. Mint say we're out of silver eagles until the end of the year? It's coming. It's going to be very close. And if I had to guess, and we're beginning to see that already, junk silver is becoming hard to get again. Silver eagles are becoming hard to get again. And so the 10th-ounce eagles are gone. And at what point does it become a realization to the masses that they need gold and silver? By then, my guess, you will see product be very difficult to get. Premiums will pop up in a very material way. And I've been begging people for almost a year. Well, I go back to November 2023 when the premiums started to drop and the availability was great. That coincided really with this AI craze and the massive increase in Nvidia and even in Apple and in Bitcoin and all of this stuff that distracted people away from precious metals and the value that we've seen. But we're beginning to see things start to disappear again. That is the opening salvo, if you will, of all of a sudden premiums going up and product disappearing. I guess we'll see how it all plays out, but If I were to guess again, that by or before Halloween, it will be a vastly different landscape for precious metals, not only in availability, but also in premium. And the way the market looks, also in its price. And when you see these big commercial banks like UBS and Bank of America and all of these other HSBC, they're all making predictions 2,700, 2,800, 3,000, silver up to 37 to 40. These are things that we normally don't see, and maybe this is the beginning of a change in the way that the metals behave, simply because the commercial banks that have ruled the roost in the West for so long and have had the ability to suppress and move the markets with paper and with volume realize that they're up against countries that don't care about how much they short the price, or they don't care about positive real yield, or they don't care about a strong dollar. They just want the metal. And that's what we're seeing with a country like India and a country like Saudi Arabia. They don't care. They just want the metal. So that's the way people should look at it. That these people know the playbook. And that's all you need to see. That's all I've ever looked at. Don't look at all the minutia. Don't get distracted. Look at what the people who know the playbook are doing. And they're doing all they can to quietly de-dollarize and accumulate commodities. And what more do you need to know?